Every day I get asked the question, how's the market? Well, today I'm going to answer that not only for the entire United States, but what we're seeing right here in the South Jersey Shore. Hey, I'm Adam D with the Local Connect and KW Realty, and we're back again for this month's market update. So here we are in the fall already. Redfin said this fall listings haven't declined as much as they typically do in a normal year. Now, earlier this month in October, we saw record-setting interest rates, the highest mortgage interest rates we've seen since 2000. Over 23 years ago. Now this is very recent, but we saw a small decline in mortgage interest rates over the past few days or so. And unfortunately it comes with some bad news with the Hamas attack in Israel. A lot of Wall Street has put their money into bonds, and therefore when we see that happen, we'll actually see a small decline in mortgage interest rates. Now as far as locally here, I've actually seen inventory pick up just a little bit. Inventory is still low overall, it's a seller's market, but it's picked up a little bit from what we saw last year. I think one of the reasons for this is some buyers have removed themselves from the market while interest rates are so high. And overall, the market's just been a little bit quieter. Now, when I say that, don't take it the wrong way. It doesn't mean that we're not in a competitive market anymore, because we certainly are. It's just nowhere near as extreme as it has been the last few years. I'm seeing some listings still hang on the market a little bit longer, but others are still getting multiple offers and selling very quickly. Lastly, one of the things I've seen come as a big surprise to a lot of clients recently is they've gotten some of their renewal premiums for their homeowners insurance or their flood insurance, and it's been significantly higher than they expected. Insurance rates have gone up, we've had a lot of carriers drop off the market, and we also have had a significant increase in rebuild costs or construction costs. Now, if your insurance is paid in your mortgage payment, expect that your mortgage payment actually may be going up in the near future when you get that insurance renewal. Just something to keep in mind. So let's jump in and take a look at the numbers right now. All right, so first we're going to look at Atlantic County, still very much in the seller's market range. Inventory has gone up a little bit. Properties are still selling very quickly, close to asking price. Prices have continued to trend up. And the most important thing I always talk about is that inventory again, right? So there hasn't been any significant changes. Yeah, it's ticked up just a little bit, but nothing very significant. Cape May County, very similar, still seller's market. Inventory's ticked up a little bit. Prices are up. Days on market up just a little, but again, on the inventory front, even though it's up, it's not a very significant change. Now, we've been talking a lot about units being down. There's less property selling this year compared to previous years. So we already can see at the end of the year here, we have our estimated homes sold. We're going to have more than 1,000 fewer properties sold this year in our MLS systems of Cape May and Atlantic County compared to even last year. And we're going to have significantly less compared to the last few years. It's just the market we're in right now, and this may be the new norm. These were unicorn years, the previous years. It shouldn't be expected to see a 2020, 21, or even a 22 again. Now, our year-to-date market numbers, right? There are fewer listings coming onto the market still compared to last year, and there's even fewer sold properties. The difference between them is what has caused inventory to tick up a little bit, okay? Days on market are up just a little, prices continue to rise, and according to these numbers, properties are selling for just a little bit less than asking price compared to last year. And the market absorption rate or inventory has been hanging around 3 months, give or take, and that's still very much a seller's market. Not an extreme seller's market like it was last year or the year before when it was less than 2 months, but still very much a seller's market. Now, Realtor.com says there's about 4% fewer properties on the market on any average given day compared to previous years, or last year, I should say. We're not necessarily seeing the same exact thing here, but this is for the country overall. And now Redfin's showing a weekly rolling average of new listings coming onto the market, and we usually see a sharper decline heading into the fall season here, and we're not seeing that yet in the United States this year. So in many ways, 2023 has bucked all of the historical trends of real estate. Now we'll see if that actually changes the market at all. All we're seeing is that there's been some seasonality changes. Now, digging into mortgages, we're still seeing about 70% of people having a mortgage with a rate less than 4%. And we're still seeing a lot of them not want to sell their home in order to get into a mortgage that's a higher rate. One of the things that's still keeping inventory low. Another reason we're actually still in a healthy market is because of the tremendous amount of equity, right? We have a lot of people that either have their mortgage fully paid off or have a considerable amount or 50% more equity in their house. And the reason for that equity is because of the dramatic price appreciation we've seen in the recent years. Real estate's always gone up over time. You can see this over the past 60 years, but it's been really dramatic over the last 3 to 5 years. But this is a really good telltale sign that if you give real estate enough time, it should increase over time. Now, Freddie Mac says that overall it appears the reduction in supply has outweighed the decrease in demand. So again, inventory is the most important thing in the real estate market, right? So we're still seeing fewer homes available for sale. And even though buyers have pulled out due to mortgage rates, it hasn't significantly changed the market yet. And the chief economist at CoreLogic said that high mortgage rates have slowed additional price growth, right? With monthly increases returning to regular seasonal averages. So I'm definitely seeing a little bit of this, right? We're not seeing the significant increases in prices any longer, but we are still seeing an increase in prices. Maybe you see that 3 to 4% that you would see in a normal year, not the 10 to 20% we saw over the last few years. And that's probably a good thing. It's more of a normal market, right? And lastly, looking into where mortgage rates would go, right now there's some speculation that the Feds may halt interest rate increases for fourth quarter. It's too soon to tell. I'm not sure if that's going to happen or not. I suppose it really depends on the inflation data, but most of the economists and experts are still predicting that there's going to be a decrease in rates over the next year. We will see if that happens. My primary concern is if that happens, does that mean they're doing it because prices have gone down? Or have prices not gone down, and now when they reduce interest rates, it'll actually cause prices to go up? Really difficult. Nobody knows for sure. But if you're a buyer sitting on the sidelines right now, you need to keep that in mind. So there you have it. That's an overall of what we're seeing for the market so far this year and in October 2023. Now, if you're a seller, I hope you can see it's more important than ever to make sure you're pricing your property correctly. And if it's a buyer, you really have to give some strong thought to if it makes sense to wait for interest rates to go down at the risk of purchase prices potentially going up. If you think prices are going to go up, it might make sense to buy now and refinance later when rates go down. We don't know exactly what's going to happen. You have that difficult decision to think about. If you like what you're seeing, please make sure to subscribe to my channel. It really helps us continue to give you these market updates every month. If you'd like help with buying, selling, or investing in real estate, this is what I do every day. Please reach out. I'd be more than happy to help. I'm Adam D with Keller Williams, and I'll see you on the next video.